TSMC, the $800 billion chip empire. This is the most important company on Earth. TSMC makes chips for Apple, for every iPhone, Mac, and iPad. For NVIDIA, every AI training chip. For AMD, every processor. For Qualcomm, every Snapdragon. 9 out of 10 advanced chips worldwide come from this one company. Market share is total dominance. In advanced semiconductors like 3 nanometer, 5 nanometer, 7 nanometer, TSMC has 90%. Samsung has 8%. Intel has 1%, and they are barely trying to enter. TSMC has no real competitor at the leading edge. Financially, this is a powerhouse. In 2024, they did $89 billion in revenue with 53% gross margin. That is industry leading. They generated $33 billion in net income. They sit on $65 billion in cash. This is one of the most profitable manufacturers on Earth. Where does the money come from? By technology node. The newest 3 nanometer process is already 15% of revenue. The 5 nanometer process is 35%. The 7 nanometer is 20%. Legacy nodes make up 30%. So advanced nodes at 70% of revenue have higher margins and higher barriers to entry. The AI training boom is huge for them. NVIDIA's H100 chip sells for $25,000, the A100 for $10,000, the new Blackwall architecture for $40,000. NVIDIA pays TSMC about $15,000 per H100 chip. NVIDIA then marks it up. TSMC captures the manufacturing margin either way. Apple is their biggest customer at 25% of revenue. Every iPhone chip comes 100% from TSMC. Every M-series Mac chip comes 100% from TSMC. The A17 Pro was the first 3 nanometer chip in phones. The M3 is built on 3 nanometer architecture. Apple invested over $5 billion to secure capacity. They are locked in until at least 2028. Why cannot anybody catch TSMC? The technology moat is massive. Over $20 billion in annual research and development spending. Process leadership at 3 nanometer now, 2 nanometer planned for 2025. Packaging technology like CoWoS for AI chips. 50,000 plus patents in their portfolio. Samsung tried for 10 years and they are still behind. Intel has the 18A node and it is still not competitive. Capital expenditure is monstrous. In 2023, they spent $30 billion. In 2024, they spent $33 billion. In 2025, they are planning $35 to $40 billion. Building the Arizona fab is a $65 billion total investment. Japan fab is $20 billion. Germany fab is $15 billion planned. No competitor can match this spending level. But there is one massive risk: China-Taiwan tensions. Taiwan produces 90% of the world's advanced chips. China claims Taiwan as its territory. The US-China tensions keep escalating. If Taiwan were invaded, the global economy stops. No new iPhones, no AI training, no advanced computing. This is the tail risk that keeps investors up at night. TSMC's response is called friend-shoring, building outside Taiwan. Arizona Fab 1 makes 4 nanometers starting 2025. Arizona Fab 2 makes 3 nanometers starting 2028. Arizona Fab 3 for 2 nanometer was just announced. Japan Fab with Sony and Denso. By 2030, 40% of capacity will be outside Taiwan. This is better than nothing, but Is TSMC expensive? Let us look at valuation. Market cap is around $800 billion. The PE ratio is around 22 times, which is fair value. The price to sales ratio is 9 times, reasonable for this quality. Compared to NVIDIA at 35 times PE. Compared to ASML at 30 times PE. TSMC is cheap for what you get. The competition simply cannot catch up. Samsung Foundry has 8% share, and they are behind on yields. Intel Foundry invested over $100 billion, and their 18A node keeps getting delayed. SMIC in China cannot even get the EUV machines. They are stuck at 7 nanometer. Global Foundries gave up on the leading edge entirely. TSMC's 5-year lead is nearly impossible to close. The technology roadmap through 2030 is aggressive. 2020-25 brings 2 nanometer production. 2026 brings enhanced 2 nanometer with GAA transistors. 2027 is the 1.8 nanometer development. 2028 is volume production of 1.6 nanometer. By 2030, they are researching sub-1 nanometer. Each node costs over $20 billion to develop. Only TSMC can afford this investment. Revenue growth scenarios look strong. The base case says $89 billion goes to $150 billion by 2030, which is 9% annual compounded growth. The bull case says $200 billion, which is 14% growth. The bear case stays flat around $90 billion. The key drivers are AI chip demand, advanced node migration, and automotive chips for electric vehicles. TSMC returns cash to shareholders. The quarterly dividend is around 50 cents per share. The dividend yield is about 1.5%. The payout ratio is 40% of earnings. They also do share buybacks. The total shareholder yield is about 3%. This is very sustainable given their cash generation ability. Let us summarize all the risks in one place. Number 1 is the China invasion of Taiwan, which is a tail risk, but possible. Number 2 is technology node delays. Number 3 is the AI bubble bursting. Number 4 is recession reducing chip demand. Number 5 is Intel or Samsung catching up, which seems unlikely. Number 6 is United States tariffs on Taiwan chips. Most of these are manageable, except number 1. Why buy TSMC now in April 2026? The investment thesis is clear. AI demand is secular, not cyclical. The PE of 22 times is fair for this quality. The dividend provides downside support. The moat is 5+ years of unmatchable technology. Geographic diversification is ongoing. TSMC offers the best risk-reward in mega-cap technology stocks. Price targets for the next 12 months. The current price is around $150 per share. The bull case says $200, up 33% from here. The base case says $175, up 17%. The bear case says $130, down 13%. The risk-adjusted expected return is about plus 15% annually. The final lesson. TSMC makes the modern world possible. Smartphones, artificial intelligence, cars, computing. 90% market share is not luck. It is execution, scale, and technology. The $800 billion valuation might just be the start. This is a 10-year compounder for patient investors. Thank you for watching this deep dive. Like and subscribe for more stock analyses. Comment with your questions below.